Let's start off with the local currency. 1.5-week highs is what we saw earlier in the trading day, 6.95. We have been trading above that key R7 level. The dollar weakening, the euro looking good, and some good economic data out of the US as well, perhaps that extra boost for risk appetite.
Good afternoon, Eleni. Yeah, you've summed it up quite nicely there. The rand's certainly benefiting, as are most sort of riskier destinations for cash, from positive sentiment around the situation on the European markets at the moment. We're obviously expecting to see, as you said earlier, the ECB talk this afternoon, and wide expectations of continued liquidity providing as well as buying up peripheral debt. So that's given some good support to the euro. And as a result, the rand strengthened as well, both as a destination for those funds. But it's evident as well in the US. The US Treasury yields have sold off. So it's an indication of safe haven money sort of leaving and looking for perhaps riskier destinations at the moment.
Private sector job growth, the ADP number that was released yesterday showing 93,000 jobs added to that payroll. And of course, the biggest increase since November 2007. And it seems a lot hinges on the fact that unemployment in the US needs to turn around. Do you think that this is going to be the turning point? Of course, initial jobless claims out today, and then we also have the non-farm payrolls out tomorrow.
Well, we hope it is the turning point, sure. It's difficult to say at the moment, but a very encouraging number, that's for sure. Still a long way to go, though, for such a consumer-driven economy as the States. We really need to get those unemployment levels down. So, yeah, we'll look at tomorrow's non-farm payrolls, really, and a consistent sort of improvement in those jobs being created would then signal the turnaround. It's a little too soon to say, though, for sure now.
How do you think the currency market is going to respond to this? I mean, we mentioned that the ECB is saying that they're going to provide unlimited liquidity going forward. We've got the unemployment figure. If we do see something that disappoints the market, could we see some more strength coming through in the US dollar and weakness prevailing for the euro?
That would be the case, yeah. I mean, as we say, market broadly expecting some sort of support from the European Central Bank with regards to those struggling debt nations at the moment, and try and keep those yields down. Anything that isn't said perhaps will certainly cause a bit of panic, and yeah, you would expect to then see the euro once again weaken, and in turn the rand would then would also not be doing too well as a result.
Looking at the strength coming through in the rand today, the greenback losing ground, as I said, against a basket of major currencies. Where to from here for the rand? Interesting comments out of Reserve Bank Governor Jill Marcus yesterday, talking about the independence of the Reserve Bank despite the new growth plans that were tabled by government.
Yeah, I think firstly on the rand, where to from here, it certainly is going to depend mainly upon the euro and the European Central Bank this afternoon. But for the time being, it certainly feels like it can stay around this sort of R7 level, and it does seem like the bias is towards a stronger rand for now, unless there are any upsets this afternoon, of course. Yeah, Jill Marcus speaking again, once again reiterating her stance on autonomy of the central bank, which is quite comforting, saying that interest rates at the moment are at a desirable level. Although we have heard that before, obviously things can change going forward, but for the time being she's quite happy with where interest rates are at the moment, and it seems to be the broad consensus in the market as well. With regards though to the autonomy, she did say that the autonomy is not impervious to economic development, so a little bit of a sort of counterbalance to the initial statements there.
Let's touch on the bond market in South Africa. We saw a little bit of a sell-off earlier in the week and perhaps late last week as well. Has that started to stabilize?
It certainly has, yeah. I mean, quite a big move, certainly in the 157s and 186s, moving up over 50 basis points. That's quite a remarkable move in the sort of wake of an interest rate cut and a rather accompanying dovish statement. So it did seem to take the market by surprise. It got up to the sort of on the 157 around the 755 level and held there, had quite a strong auction. We're back now sort of around the 735 levels on the 157, and seems to be sort of just treading water at the moment around these levels. So certainly the panic has cleared in that market, and it does seem like it wants to sort of trade a narrow range at the moment, but the risk you would feel is still to the weaker side for government bonds at the moment.
Something that's still bubbling under the surface, whether China is going to raise interest rates going forward because of the inflationary worries that have come through, and that also being a feature when you look at the PMI number, which came in much better than expected. In fact, on a global level, coming in much better than expected. Should China hike interest rates, where does that leave the local currency?
Well, I mean, we've been speaking about China for a while, and their economy is quite an exception to the rest of the world, as we know. So, yeah, once again, a good PMI and production figure coming out of China, but not to be unexpected. And China has been raising rates to sort of counter those bubbles, as they've said. So, I don't think there'll be too much concern. I think the market is still expecting them to keep those sort of tight monetary policies and keep their economy under control. So, no real sort of nothing unexpected really there in that regard.
In terms of trading going forward in December, do you expect things to start thinning out and, of course, volumes to start tapering off?
Yeah, I think that's natural. Yeah, we're also feeling it today. You know, the volume certainly will decrease going forward. We've just seen, we did just see some vehicle sales figures coming out as well just earlier, that have showed some rather encouraging export figures. So with vehicle sales more or less around the middle of their sort of, where they've been at the low of 25,000 per month, up at the highs of 65,000, coming in at 44,000 now, in the middle of that range. But what's quite important about that number was the export component of cars that we're selling. So once again, going back to the rand, it's quite encouraging to see that we can have a sort of bumper export month in vehicle sales, selling more overseas than we are locally. Just goes to show that with a strong rand, we still can be competitive if we get our cost structures down locally. So that's something quite good.
James, do you think that most of these exporters are now readjusting their books so that they can cope with a stronger rand? So in other words, it can be done dealing with a rand that is below 7 to the US dollar?
Yeah, I think that's a good point. Yeah, I think that's self-evident in those vehicle sales as well, and it is something that for years we've sat with a depreciating currency, and now it's looking so good internationally, and as a result, yeah, certainly businesses have to adjust those. I mean, we've seen some good manufacturing figures as well this week in line with that, so that could be evidence of what you're saying, evidenced in those new sales and business activity in that figure.